In institutional finance, millions of dollars in daily trading volume usually signals a highly active, structurally sound asset. But crypto markets play by a different set of rules. Today, we are looking at Toshi. This graphic charts an asset that has plummeted 94% from its all-time high. Yet, branching directly off that brutal decline is a daily trading volume consistently clearing $7 million. That ratio forces a difficult question. Assets down over 90% are typically abandoned, seeing their liquidity dry up completely. A truly dead token has no buyers and no sellers. Toshi, however, functions as a highly active, heavily traded proxy for its parent network. The problem facing a trader right now is to figure out if this persistent volume points to an eventual recovery, or if it is simply a high liquidity trap. Finding the answer requires discarding traditional technological valuation models entirely. We have to look strictly at market momentum. Toshi operates entirely on the Base network, which is the Layer 2 scaling blockchain created by the central exchange Coinbase. The token itself is named after the actual pet cat of a Coinbase co-founder. There is no corporate entity backing this and no official leadership team steering the project. Instead, operations are completely decentralized, with governance decisions handled entirely by a community group known as the Meow DAO. Buying this token is a direct, leveraged bet on the adoption of the Base network. In exchange for that exposure, you accept that there is zero underlying technological utility to hold on to. Let's check the tokenomics. The total supply is strictly fixed at over 420 billion tokens. At current prices, that puts the project's total market capitalization at roughly $55 million. This matrix shows standard memecoin structures. Left, usual hazards like locked vaults and insider allocations. Right, Toshi. All 420 billion tokens are fully circulating. No isolated team wallets or scheduled venture capital unlocks to suddenly dilute the price. That fully circulating supply acts as a powerful protective shield against the most common types of token manipulation. But that transparency comes with a sharp trade-off. There is no hidden burn mechanism coded into the contract. Without a way to destroy tokens, the project cannot generate artificial scarcity to intentionally drive the price up. You get complete operational transparency, but you sacrifice the engineered upside drivers that push other tokens higher. The reality of this setup is an absolute reliance on organic market demand. If buyers stop showing up, there is no structural safety net to catch the price. This chart tracks Toshi scraping along a 1/100th of a cent floor. Zooming out reveals a massive drawdown from a January 2025 all-time high. This downward slope confirms bearish sentiment. Buying here is a high-risk falling knife. Confirm a trend shift by reclaiming the 2/100ths of a cent level here. Taking a position today means actively fighting heavy downward momentum. Strict discipline is required until that specific resistance level definitively flips into support. Let's split this scorecard into two distinct investment profiles to see where this asset actually belongs. On the left, the fundamental investor. On the right, the momentum trader. The fundamental investor requires real-world utility, strong technological frameworks, and cash flow generation. Toshi has zero real-world utility and no revenue streams. If you buy assets based on technological use cases, this token is a strict avoid. Now, look at the momentum trader. This profile needs deep liquidity pools, continuous daily trading volume, and leveraged beta exposure to a growing ecosystem. Toshi consistently logs over $7 million in daily volume, and its fully circulating supply provides clean exposure to the Base network's growth. If you trade active network momentum, this asset earns a place on your immediate watch list. But that watch status comes with a strict condition. Hold off on executing any entry until that technical price reclaim is confirmed. Toshi functions perfectly as a high-risk instrument to capture Base network hype, but it will ruthlessly penalize anyone treating it as a long-term technological investment. If you are ready to trade the Base ecosystem, you can find Toshi on centralized exchanges like Coinbase and Kraken, or through decentralized platforms like Aerodrome on Base. Remember, this analysis is an objective breakdown of market dynamics to help you evaluate your own positions. It is not individualized financial advice. Like this video, subscribe for daily crypto breakdowns, share the video, and comment below on whether you are bullish or bearish.